But in the past, when we've seen big federal changes to tax law in the Reagan era and in Bush's tax cuts, both of those turned into real significant boosts in terms of Oregon's own source revenues. Although a secondary effect, for households to what's going on in their federal tax bill, for us, these are big impacts. And with the LRO numbers and some DOR numbers that are coming out now, depending, of course, the devil's in the details, what the federal tax plan actually looks like if it does get passed. But looking, at skeletons of what they're talking about now, we're looking on the order of $150 or $200 million a year in additional Oregon revenue. And so 150, 200 million a year, when the kicker threshold over 2 years is $350 million, these are big numbers and things that are catching our attention. So really two ways that federal tax law feeds into Oregon's revenue stream. The biggest potential impacts are direct effects. And these direct effects come from efforts at the federal level to broaden the base. While the federal tax law is talking about cutting rates, they are also broadening the base by eliminating or reducing a broad range of deductions, subtractions, and the like, what you can write off your federal income. Well, for Oregon, the starting point of our Oregon taxes pretty much is federal taxable income. So a lot of these itemized deductions in particular are going to, if they're disallowed at the federal level and we reconnect automatically, that will disallow them at the Oregon level and increase tax liability here in Oregon significantly. And this is a big deal for Oregonians because we like our deductions. Both low-income households and high-income households alike itemize deductions more than they do at the U.S. level and for larger amounts. And why is this? A lot of it has to do with one particular deduction, which is the state and local tax deduction. Ignoring the property taxes, this is relatively big in Oregon. 5% of our AGI in 2015 were, written off due to this state and local tax deduction. So once you make this one big one, it now makes it more favorable or more likely that a tax filer will itemize. And therefore, all of our itemized deductions tend to be bigger than other places in the U.S. We itemize a lot more than just largely because of this one, because this one is big enough to make it worthwhile for a lot of taxpayers to itemize. So the direct impact we worry about, okay, well, to the extent that this base is broadened, this can feed straight into Oregon revenues. There are also indirect impacts, which are sometimes scary large too. Oh, sorry, yeah. The indirect impacts being predominantly from the fact that you can write off your federal taxes paid on your Oregon taxes. And so anything that broadly lowers your federal tax bill lowers the amount that you can write off your Oregon taxes, and therefore puts positive upward pressure on Oregon tax revenues. And so we're seeing that as well.
So, thank you, Mr. Chair.